Hey, good afternoon. Scott Luton and Greg White with Supply Chain Now. Welcome to today's live stream. Greg, how are you doing?
I'm doing excellent, Scott. Very pleased to be here. It's been an amazing week, right? This is our fourth live stream of the week. Looking forward to this. This is good news. We've got a practitioner with us this quarter, so let's get on it.
Let's do it. So what Greg's referring to on this episode, we're going to dive into key insights from one of the leading transportation industry resources, the U.S. Bank Freight Payment Index. So we're going to be not only taking a look at the data and analytics, but we're going to be getting key takeaways from two folks that absolutely know and deal with it day in and day out. So stay tuned as we work really hard, Greg, to increase our audience's supply chain IQ.
Let's do that.
Hey, before we introduce our guests, we want to set the table in a couple different ways. So we've enjoyed our continuing collaboration with U.S. Bank, one of the leading financial institutions involved in powering not just the transportation industry forward, but that as the backbone of global supply chain. It's a major player, right?
No doubt. Something like $28.8 billion of freight payments. I'm really dying to know how much Trent pays. Probably can't share that with us. But they in 2019, $28.8 billion worth of freight transactions. That is a huge percentage of the total transactions. I remember when we were talking about this with them initially, usually to have an authoritative index, you have a fraction of the marketplace as your data set. They have an enormous proportion of the marketplace as their data set. So it's an outstanding indicator of the realities of the freight market, which
agreed
have not been pretty lately.
Agreed.
No news to anybody, but I can't wait to hear the actual numbers.
Well, the good news is there is good news, and we'll touch on some of that here today. So with no further ado, I'm going to welcome in our two guests.
Let's do it.
Once again, Bobby Holland, Vice President, Group Product Manager and Director, Consulting Services at U.S. Bank, and he's joined by Trent Zuberi, Associate Manager, Logistics, Finance, and Freight Payables for U.S. and Canada with the Kraft-Heinz Company.
Man who pays the bills.
All right. Good afternoon, Trent and Bobby. How are you both?
Doing well. Good afternoon.
Doing well, gentlemen.
Yeah, really, good to have you back, Bobby. Good to see you, Trent.
Good to see you guys.
We really enjoyed the warm-up conversation, maybe more than we should have. We're going to have to continue that post-show.
Yes.
But it is a pleasure to have Bobby back once again. We get a ton of feedback around this quarterly series, especially on his insights and perspective and what it means. And to be joined by a practitioner and a supply chain professional that deals with this component of supply chain, it's going to be a big treat for our audience. So real quick, before we dive in and get to know both Bobby and Trent a little bit better, I want to say hello to Benjamin, to Stefan, to Felicia, and our friends over at the Reverse Logistics Association. Sayad, great to have you here, and Miguel from Peru. Thanks for tuning in via LinkedIn.
Oh, man.
Very cool. Hi, Miguel.
All right. So let's get to know both Bobby and Trent a little bit better. So, Bobby, tell us a little bit about yourself, including just a tidbit about your professional journey.
Well, as you stated, I'm the Vice President and Director of our Freight Data Solutions team, product management. We work primarily to build data products to add value to our customers. From a professional journey standpoint, I primarily have a background in software architecture, software engineering, and professional services. I've been with the bank for 4 years and 4 years in transportation. So,
all right. Outstanding. Well, great to have you back again. Our listeners really benefit from your expertise. All right, Trent, please tell us about yourself and your professional journey. And please, I'd invite you to share what some of our listeners may not be aware about your podcasting programming.
All right. Well, yeah, we'll definitely drop that on here. But professionally, let's start with that first. I work for the Kraft-Heinz Company. I'm the manager of freight payables for the U.S. and Canada. I've been with the company about 4 years. I initially started in IT, doing the freight IT stuff, just kind of implementations, new product design, things like that. And then I worked very closely with the freight payable team. So I was very familiar with U.S. Bank and what was going on, some of the issues we faced with the interfaces and the technology. So when that freight payables manager was leaving, she recommended, say, hey, look, you know this space. You're already on it from the back end. Maybe it's a good opportunity for you to take over. So one thing led to another, and here I am. So it's been a nice, interesting journey to see this. I was never a finance guy. That's the thing. I have no finance experience prior to this. I went from a marketing major to working for a logistics company in inside sales to to product development, IT, it's like my journey is the most bizarre journey you can ever imagine to end up as a finance guy. I mean, that's
multifaceted.
And we're, represented here by IT and technology cats. So the analytical minds are in the house today for sure.
So the very diverse background, Trent.
Yeah.
And you also you get podcasting because you do it. You've got a popular podcast of your own, right?
I do. I do a show called Total Nonstop Impact. It's a weekly, 3 times a week breakdown analysis of Impact Wrestling, which is owned by Anthem Media from Canada. They're on Access TV, which is a very popular channel. I'm sure everybody's got Access TV and Twitch.
Yep.
So I've worked with them. I've done some music for them. I've done some behind the scenes stuff for Impact. I do some production work. So I've worked with Impact Wrestling in the past. And so I do a weekly kind of morning zoo-like talk show, very Howard Stern, Mancow-like approach to pro wrestling. So very different than the 2 guys sitting in the room, just breaking down each move. Where it's a very zany approach. So that explains the microphone arm and all that stuff.
Hey, we love it. I
can't wait to get your breakdown on these numbers.
Yeah.
Take that approach. Let's see how that
those numbers. Yeah, absolutely. That's where to go. Let's make wrestling analogies throughout the numbers.
There you go.
Perfect. All right. Hey, real quick before we continue on here, I want to say a big hello, an internet hug to Patrick Kelly, who also hosts an outstanding produce podcast, and of course, folks are moving lots of produce. So I'm sure he and his listeners will enjoy today's live stream. Okay, Greg, we want to switch gears and continue to set the table a little bit, right?
Yeah, I don't want to get too distracted, but that Miguel from Peru's got me thirsty for a pisco sour. So let's get through this. Let's be efficient. All right. And let's get to the bar.
It is Friday after all, guys.
It is indeed. So look, Bobby, tell us why you at US Bank Corporate Payment Systems, why you are qualified to do this. The $28.8 billion, which still astounds me, it is pretty impressive. But tell me, why you do it and the service that you provide to the industry here.
Well, the thing that makes us the one of the best to do this is, over 20 years of payments processing. As you pointed out, billions of dollars in payment transactions helps us to build and maintain that big data perspective. So this gives us the ability to, leverage insights that we can find in the data and provide those to our customers to add value to and help them make better business decisions off of that data.
So tell us a little bit about how the Freight Payment Index, a little bit about what it is. Probably need to introduce some of our newer audience to how it works as well.
Okay, well, the Freight Payment Index is U.S. Bank's perspective on the trucking and freight transportation marketplace with a primary focus on truckload and less than truckload, because that comprises more than 80% of our data. The idea is to measure the velocity of and direction of the movement of the marketplace, and thereby provide an extrapolation on the economy at large. So we use our data to help provide a window into what's going on in the business and what's going on in the economy.
Got it. So, and can you explain to people, because we're going to talk about the 114, 120 rates. Can you explain to people a little bit about how the index is constructed so they understand?
Well, basically we compare quarter over quarter. We look at, the customers we had in the previous quarter, compare those to the customer base. We apply some statistical analysis to it to kind of filter out our business aspects. So when we present the index, we're not measuring how well US Bank did quarter over quarter. We're measuring what's happening in the truck marketplace. And there are analytical ways to do that.
Right.
And so we measure it quarter over quarter and year over year.
Got it. All right. So Trent, I'm dying to ask this question. I know you probably can't answer it, but I'm gonna ask it anyway.
All right.
Of the 28.8 billion, how much of that is
Oh, I'll tell you. 'Cause
Kraft-Heinz?
I'm proud to put that out there. Because again, you tell my dad how much money in freight I handle. He likes to, it makes an old man proud that Kraft-Heinz, that 2.5 billion of that comes through Kraft-Heinz. Yeah.
Wow, that is significant.
It is a lot. It is quite a bit. And it's only grown. I mean, I took over this space 2 years ago, and we were just under 2 billion. And the last report came by, and it was 2.5 billion. I mean, it's incredible how much has increased, even with the pandemic. And I know we're going to talk about that even more, but and how that, a company like Kraft, who does, a lot of prepared food, a lot of boxed goods, how that even increased. And I'm curious to see what this year's numbers are going to report. It's only going to go up. I mean, we've seen it in other areas, so it's a lot.
How do you or your colleagues use the freight payment index? I mean, what kind of management or analytics or whatever do you do around the freight payment index?
Now, our transportation team and our planning is the biggest thing. Like the planning of it is, and consider this: Kraft on an average ships about anywhere from 2,000 to 3,000 shipments a day. It's a lot of freight moving daily from all of our facilities, right? And the planning that goes into that is immeasurable. I mean, like the amount of people and hands in that. So the more data that we have to play with, when it comes to that, how we can utilize that index to just plan forecast what we're looking at going forward and what we have to expect, what we are going to encounter. Just having that, even if it's just a small step ahead, is so vital for a company our size, because that small step is a huge advantage to a company like us.
And it could be worth tens or more millions of dollars, right?
Absolutely.
With the volumes that you all are doing, that's incredible.
Yeah. And all the regions.
Nearly 10% of the transactions that U.S. Bank is doing. Bobby, be nice to this guy.
We are.
I will say the U.S. Bank team. This is not me just doing this because of where we're at here. They are one of the best teams I have ever worked with in my professional career. One of the most supportive and most involved teams I could ever ask for, and they take care of us big time. I would not be sitting here with hair if I didn't have the U.S. Bank team. And look, there's plenty of hair there, so I'm thinking I would not be sitting here with hair if there was not a U.S. Bank team to cover my butt once in a while.
Love that. That's for our first T-shirt-ism of the episode right there, Greg.
Yeah. Well, let's put this data in a headlock and get going.
Let's go.
Right. Okay. So, Bobby, I'm going to share a couple of graphics here, but let's start with some higher level observations around what the second quarter's freight payment index is telling us. Let's start national level too.
Okay. Well, as expected, the index fell by a number of percentage points. This was expected simply because of the impacts of the COVID-19 pandemic on, again, not only the freight industry, but the economy at large. The national shipment index decreased 7.6% from last quarter, and the spend index decreased 13.7%. This was, again, largely due to the difficulties. Even though things were still moving, we saw, an up spike in quarter one that was balanced by an up spike in shipment of, binge buying of goods, PPE equipment. But it also, at the end of Q1 was when most of the stay-at-home orders went into effect. And so once that binge buying thing got over with, it mitigated the spikes. And then we saw the true impact of the virus on the economy. And so that's what we're seeing in Q2. It was expected. There are some glimmers of hope, as we'll see as we continue to go through. But at the national, everything is down pretty much as expected.
All right. So, hey, quick to our audience, especially if you ship stuff, y'all tell us what you're seeing in your neck of the woods, whether domestically or internationally. We'd love to get your comments here. Okay. So, Bobby, let's keep driving. And let's kind of get some initial observations regionally because we're going to dive in a few minutes, kind of region by region, but give us some quick observations regionally at a higher level.
Well, as I stated, there are some glimmers of hope. Most regions were generally down. We saw that the Southwest was the one region that had a gain in shipments, although spend was still down by quite a bit. The West was the second best region with only a 1.8% drop. And this is because California appeared to flatten the curve early on in the progress of the pandemic. And so we're able to resume, I won't say normal, but near normal activities, shipping activity. The East Coast, as we well know, Northeast and Southeast got hammered. The Southeast, again, in last quarter saw some gains as they were one of the last to shelter in place or stay at home. But once they did, then that's when the impacts started to hit them. And the Northeast was, everybody sees the stats on New York City and hence the state and just that entire tri-state region.
Right.
Center hotbed of COVID activity for a period of time. And so from that comes the huge impact to the Northeast as that we are only now climbing out of.
Yep.
Those are the big ones.
Excellent. First comment from our audience comes from Jamin, who does a lot of work in the logistics and transportation space. Looking forward to his new series here. He says, for domestic shipping, from what I'm experiencing, feels like a mixed bag at the moment. Some way up and others way down. So great to have you here, Jamin. Appreciate all of your expertise. Okay.
You think that's way up in rate or way up in shipments?
That is an excellent clarifying question. Jamin, please tell us. All right. So let's I want to kind of go around the horn a bit based on what just Bobby shared. And Trent, let's start with you. Quick comments based on those observations.
The regional aspect of that is very interesting to see, right? How the states that were affected most had their fluctuations, and the ones who flattened it had a fluctuation the other way. For us, for Kraft, like speaking just from our perspective, I saw ours was a little more balanced because of, as I mentioned off air, the nature of what we ship, the nature of our goods. While the general activity was up and down, ours was higher for the most part because when this first hit, when all this was in the panic mode set in, late March, early April, products like ours were the most vital to stock up on because we didn't know how long we had to expect this whole thing, right? So there was a huge demand in our boxed goods, our the mac and cheese, which is one of our biggest products.
Every college student in the world is thanking you for that.
Exactly. That's what I'm saying.
My 3 kids love it. Big fans there.
Exactly. So things like the mac and cheese, and people with kids, we're like, what am I getting? What are we going to rely on for quick meals for the kids? Mac and cheese shipments were through the roof.
Mm-hmm.
The different Cracker Barrel pastas, the dry goods were just through the roof. The demand, we almost couldn't keep up with the demand, and it was, but in a good way. I mean, it was good for business. But at the same time, now here's the counterpoint to that. Our food service industry got hit when the shutdown happened. Now there's no ketchup and mustard packets going out. There's none of that happening. There's no bulk condiments going anywhere to all these different no theme parks, none of the museums, you name it. Right. And that dipped heavily. So we almost, in an odd way, we balanced out by upping the consumer goods, in the retail market, but then falling on the food service area. So it was very, very interesting to see how one canceled the other out in that sense. But from an activity standpoint, we were busier than ever, really.
Hey, a lot of good stuff. Who can't relate to mac and cheese, Kraft mac and cheese? I mean, I really appreciate what you bring. That's it. This is the for me.
Yeah.
We create a lot of content here. I think trying to balance the data and analytics and connecting it to an everyday occurrence that consumers, and for that matter, supply chain professionals that may not be involved as much in coordinating shippings. Everyone can connect to that. So, and relate to that. Greg, I'm gonna get your take, but before we do, I'm gonna let Jamin mentioned so rates seem to be way up across the board, and capacity tightening. Shipment volume is what's feeling to him as a mixed bag. So good stuff there.
And that reflects a lot of what both Bobby and Trent just said. It depends on the industry, right? Whether it's going to be up or down, and probably the product line. I mean, the products, for instance,
automotive industry is one that's been hit hard.
Big time.
Yeah.
Versus construction and online retail sales.
Mm-hmm.
What we saw. So
people are staying home. So deodorant sales are way down. Come on, people. No joke. Deodorant sales are way down, right? So obviously personal hygiene is taking a hit. But I think one of the dynamics that leaps out at me around the regional metrics, and it is really interesting, isn't it, Trent? Because when we did this last quarter, California was not at nearly as far down, California was already way down actually. And the Southeast was up. And what we were seeing, the impact we were seeing there was that the ports were already closed in California, and volumes have been shifting to the East Coast for a long, long time. And the ports of Charleston and Savannah were still operating at capacity and putting trucks on the ground to do that. And so California didn't have that far to fall, whereas the Southeast did have because the Southeast was up significantly. And, when lockdown occurred and once all those ships hit the shore and offloaded, it was all over, and it was all over early in April here.
Yeah.
Good stuff.
And that's if I could just jump in for a second. That's the interesting thing about an index measurement is, to your point, Greg, because the Southeast was flying at such a high level, even though it looks like a tragedy to drop, what do we say, 14%? That's 14% of slowdown, if you will. It's like letting up off the gas. If you're doing 80 miles an hour and you let up 14%, you're still going to be speeding.
Yeah.
It's not going to be, flying.
Sounds like the voice of experience.
Great analogy, actually. Yeah.
We don't want to paint the picture that the Southeast is like, dystopian. We want to understand that, as your point was, the Southeast had farther to fall. So any, big reduction, if you will, is going to seem significant, but it's not by any means the Southeast hasn't crashed.
Yeah.
Right. I want to make sure.
Really good point. I'm glad you
made that point about an index value versus raw quantity.
Yeah, that's right. It's relative to where volumes were before. Correct.
Yeah. Well put. And that's great clarification. All right. Love the commentary. And in fact, I like the commentary, not just here in this conversation, but with our audience talking about, they love the mac and cheese conversation.
So many comments on mac and cheese. It's incredible.
Yeah.
We got folks calling for a mac and cheese podcast, by the way.
Mac and chat I saw in there.
Mac and chat. That's right.
Might be on something, guys.
Chris Barnes weighed in about a second ago about how his grape jelly and ketchup supply is way down. He usually grabs a couple extras, I guess, in fast food places, and that's no longer the case. Right. So we're stimulating lots and lots of conversations here. But again, it's about how these numbers from this exhaustive research, how it plays out in daily lives. So I love these connections here. Okay. So let's go a little bit deeper and use that segue, that clarifying conversation around, how to view these really accurately, especially for our audience. Bobby, let's go region by region, and let's start with the Southeast region. We were just talking about that a moment ago. Give us a few more details on what you saw in the numbers in second quarter.
Well, Southeast, as we know, again, from empirically in the news, the Southeast is struggling with a spike in COVID cases. And you'll kind of see that as a trend where as the cases rise, then the potential for fall off, it follows that same trend. So right now the Southeast is trying to dig out from after the success of their belated shutdown. Now they've reopened earlier than others, or actually never really quite shut down. And so now they're feeling some of the impacts of that. So the Southeast is continuing to struggle under that. We still expect a recovery because, like I said, it's not dystopian there. It's just a big slowdown.
Mm-hmm. Yep.
and that's the Southeast. Again, 14.1% in contraction in shipments, and the spend was down 21.4%. So it fell, from a high level, but it took a big hit.
So rates, does that indicate then, Bobby, that rates fell at a greater rate than shipment volumes did? If spend was down more than rate or than shipment.
Well, yeah, one of the big impacts has been across the board has been like fuel prices. So that's going to lower the cost of shipping in a lot of ways, but the demand is to some extent is still there.
Got it.
All right, so let's move from the Southeast. Let's move over or up rather to the Northeast. Bobby, give us a couple extra details there.
Northeast was the largest hit by the COVID. It's the epicenter, as I think we put it in the index.
Mm-hmm.
We see that the Northeast, it contracted 12.6%, and the spend index dropped 12.7%. So again, a huge hit in the Northeast. We had hard shutdowns up here for a period of time. It'll be interesting to see what third quarter looks like, as New York appears to flatten the curve. And we're at level 4 opening right now. So things are slowly starting to pick up here. So it'll be interesting to see what it looks like in Q3, but Northeast, took some huge hits, but the good thing is that they're managing it more regionally than other places. We have the Tri-State Commission, and they've added more states to that to help, manage the pandemic response. So that is bound to have a more positive impact on shipping.
All right, good stuff there, Bobby. All right, Greg and Trent, we've tackled 2 of the 5 regions as we continue to go region by region. Y'all feel free to weigh in on any additional thoughts. But before you do, Chris says, "Nice try, Greg White. Reminded me of something a physics professor once said: you can be accelerating at a decelerating rate." I don't know about you, but that's above my pay grade.
Yeah, that's a little poetic right there.
Yeah.
All right. So, Trent, based on your massive network, as we look at these first 2 regions, the Southeast and Northeast, any does that stack up with what you saw the last 3 months? Second quarter?
Totally does. And 2 of the most active regions, that we have. And for a company like Kraft, obviously almost every region has is busy. But Northeast and the Southeast are 2 of the most active based on certain product popularity, different sales, mac and cheese being high in one and lower in the other, but Oscar Mayer being higher in one, things like that. We just have our regional favorites, our regional focuses. So it completely would spot on with what Bobby said, that it's exactly what we were seeing. And we felt, we definitely felt it's interesting. We felt the hit with those areas that were hit the hardest, especially the Northeast. The Northeast being that they shut down so quick and so diligently. You're not getting trucks in there. Or whatever you're getting in there is going at with smaller capacity and less product, less diversity in product. Maybe more basics were being ordered. They were just wanting just mac and cheese. We don't want to have the fresh meat or the Oscar Mayer stuff or things like that. It was very focused for a little bit. So obviously more focus equals less activity. Yep. Less diversity in trucks and shipping. So it was very interesting to see how that pattern fluctuated too.
Yep. Lots of pantry loading. Okay, Greg.
Yeah, quick
comment, and then we got our first question for Bobby. Go ahead, Greg.
Yeah, I think pantry stuffing is exactly what we saw. If you look at the early part of the quarter, we had already started to see, when we announced the last freight payment index, we had already started to see it, because we do this a couple weeks into the next quarter. We had already started to see the impact of pantry stuffing, and it was beginning to tail off at that point.
Right.
I think this is one thing I think we can talk about too is, Bobby, if you think back to the very first one we did of these right at the beginning of the year, we all knew that this was going to happen. Not COVID-19, but we all knew that it was going to get worse before it got better. Right. I know, Bobby, your job's not to predict, it's to report, but a lot, the analytics that we saw and the other commentators that we had on during this time were all universally saying that. So I don't think we expected it to get this worse before it got better, but and maybe not right at this time, but in a way, I see this as accelerating the recovery. As we talk a little bit about the optimistic news, but I think this massive dip will help accelerate the recovery.
That's good news. Okay. Good stuff there, Greg and Trent. All right, Bobby, our first question comes from Stefan in Dallas, Texas. Stefan, hope this finds you well. Great to have you here today once again. He says, Bobby, on a spending note, before prices fell, did you see or hear of shippers having a general interest in electric transportation? Cheaper consumables, easier to get your own supply, et cetera. Anything you can weigh in on that, Bobby?
Not so much about the interest in electric transportation. I mean, we do research and read, articles, the same types of articles that people see in the industry. And so there's still a general interest in electric transportation. Don't know if it's a high interest right now. Like I said, people are struggling with the current fuel prices. So maybe it's not the biggest cost proposition right now, but and for a while in the first couple of quarters, there was a slowdown on capacity. So they were canceling truck orders, and that's starting to ramp up again. So we'll have to see. As far as the other trends, again, we don't know that we have that level of detail in our data for those particular things, but we're watching to see how those things shake out and what the impacts are on the industry.
Yep. So, and go ahead, Greg.
Nope, that's exactly what I was going to point out that in the stream.
So Chris follows up in their chat conversation here, and he's asking if there is more consideration to insourcing transportation. Any comments from our panel here on that?
Insourcing.
Are you considering that, Kraft-Heinz? I mean, I think that would show, Bobby, correct me if I'm wrong, but that would show a reflection in the data if companies were beginning to insource transportation. I don't think it could have that impact in a quarter, though. I mean,
it would be
have that kind of volume impact in a quarter to start insourcing. But have you seen any of that? Any indications of that?
I have not. No, I haven't. No, really. And it'd be interesting. I'm curious now if that conversation's even happened on the planning and procurement side, because that is an interesting take. It's I can't imagine that it hasn't come up. Let's put it that way. I imagine that topic has come up at least. Yeah, just by the nature of it all.
It seems like it's such an unsure time to make a strategic shift like that. It seems like a terrible time to do that.
Yeah.
Even if you're spending too much or the risk is great, the risk of transition seems greater than the risk of performance of your vendors. There are so many out there, and they are so desperate for business. So sorry, Bobby.
No, I was going to say you're correct. And there are some decisions that are strategic to make in a time like this, and we can see a lot of shippers and carriers adapting to, the elongated nature of the pandemic. But some of those decisions, everybody's still trying to separate out and determine what the new normal is. And so to make a big decision like that when we're not sure what's going to happen, we start to pull out of the recovery. I just can't see that at this juncture.
Yep. Yeah. All right. We got one comment on this from our audience, Antonio. I think Antonio's with EAL Green, by the way. Insourcing makes sense with TMS systems and integrations with DAT and truck stop. Why keep paying the 15 to 25% broker model? So good stuff there from Antonio.
Can I just make one point?
Yeah.
Antonio has new knowledge because he has new authority because he just got promoted at EAL Green. So congratulations.
Congratulations, Antonio. One other quick comment. We spoke earlier this week with a sensor and tracking technology organization. And one of the things that this executive was speaking to was a lot of organizations were using newer carriers, and they could make that decision with more confidence because they were using this tracking technology that ensured that cold chain, that temperatures were maintained, and their freight was being protected if the relationship wasn't there. So I thought that was a interesting conversation we had, Greg. Okay. So let's keep driving. Let's dive into the outstanding American Midwest, rather. Bobby, give us a couple details on the Midwest and what the numbers showed us in second quarter.
Okay, Midwest down 5.5% over last quarter and 11% from the previous quarter. Midwest, we see things starting up with the Mexican border as they start their manufacturing. That was one of the things from the national perspective, is that the manufacturing mixed bag of starting back up, but definitely in Mexico. So shipments across the border are starting to increase. And so the Midwest had one of the lower dips, if you will. Trade war with China is impacting the Midwest, partly because of the proximity to the West Coast.
Mm-hmm.
But China's not buying as many factory goods or agricultural products, and the Midwest is big on agriculture in that regard.
Right.
Yes.
So as either of those things start to change, then the Midwest should pick up accordingly.
Outstanding. Okay, Trent, any comments there? Midwest.
Bobby hit it perfectly with the agricultural aspect of the Midwest. That's huge. That is complete. I would think that is one of the probably the biggest impact on the Midwest is that, and we've seen it too. You know, we see it with some of our plants that are in the Midwest, how their activity had to drop due to those kind of products. Anything corn related, for example, was affected because those things, you know, obviously sales were down for that. So we were seeing a lot of that in the Midwest territory as well. It's exact reason Bobby's mentioning here. So it was the correlation is spot on in that sense, you know.
Love it.
Yeah, I think the interesting news in the Midwest is it's not all, and maybe not even majority, COVID related.
Exactly.
It's China trade war related.
Big time. Right. That's a huge part of it. You know, I mean, these are big markets for us, and you throw that fork in the machine right there. It's not even like you said, it's not even COVID related. It's more business and politics at that point.
Yeah, it is, because I mean, farms they've been designated essential businesses, so they've been allowed to continue to operate. So it has to be outside factors that are impacting the agricultural aspect of transportation.
Absolutely.
Stefan says he learned in school that the Midwest is the grain chamber of the West. All right, Stefan, on a roll.
On top of what, gentlemen, the Midwest had some of the biggest fluctuations in like state to state, you know, for pandemic numbers. That was like, you know, Illinois flattened it pretty well, you know, Chicago for the most part, but Illinois did better than, say, Michigan. Michigan was out of control for a bit. Indiana went whole rogue directions. Like those things in Iowa, that was where we have some plants also. You know, Kraft-Heinz has some facilities in Iowa. And they were forced to lock down for certain times. They were forced to run limited staff, limited capacities, but there was also no demand either to back a lot of that up to justify a lot of that production too. So it was fluctuating so much state to state that it was like you knew that was going to play into all of it.
Yeah,
it's good, good stuff there from the front lines, so to speak.
Yeah,
Trent, love that. Okay, so let's move to some good news. One of the highlights of the second quarter freight payment index, the Southwest. Bobby, what did you see there?
Southwest actually rose 1.3% in shipments over the during the second quarter, but 14.2% in spend, down from the first quarter. And again, like most of the other regions, softer pricing and lower fuel surcharges. But I kind of misspoke a little bit between the Midwest and the Southwest. The volumes in Southwest were impacted positively because of their ability to deal with the COVID better. You know, you look at like Oklahoma, I want to say New Mexico, Texas even. They were able to cope a lot better throughout the pandemic, and so they had more economic activity as a result. But then they were also impacted by the factories in Mexico reopening and starting to ship more goods. So that's why their story is a little bit better to tell than the other regions by the most part.
Well, they had been down the two previous quarters as well, right?
Yeah, they were hit hard early on.
So again, they are, to quote Chris Barnes, physics professor, accelerating at a decelerating rate, or decelerating. at a decelerating rate.
Chris, you're gonna have to tell us your physics professor's name so we can give him or her proper credit. All right. Any comment there, Trent, the Southwest, or did your experiences also, fall in line with what the FPI was telling us?
Pretty much falls in line with that. My what's interesting though is I didn't really explore too much on the Southwest activity as far as just related to craft and whatnot. And I'm curious now. By default, living in Chicago, I kind of just I take in more what the Midwest numbers end up being, just so I'm curious what's on my shelves, so to speak. Southwest I didn't dig into too much, and I'm kind of curious. And I'd like to maybe sit down and dive in more on that. And I can see it just from the freight payable side and the activity that's come through. But I am curious to explore that area a little bit more than I have. But that's interesting. It's very interesting to see how they, above everybody else, they were increasing, which is really cool.
Trent, did you load up in your kitchen in last few months? I'm
going to tell you guys a really funny story about my grocery experience with the pandemic. I did 2 big shopping trips at the end of March, and I rolled that food from I think March 29th until this past Saturday when I went grocery shopping again.
Wow.
It became a challenge to me to see how long I can go without grocery shopping.
You must have bought a lot of stuff you like, or eaten a lot of stuff you didn't.
Listen, I'll tell you guys this. I watched a ton of Gordon Ramsay throughout this pandemic. I'm talking 17 seasons of Hell's Kitchen. I learned how to cook better than I ever have. I'm making fresh bread. I'm preparing meat. Like I'm yelling at myself in the kitchen like Gordon Ramsay does. My creativity got incredible during this. One of the best things that come out of it was my cooking is phenomenal now. I mean, I'm thinking about going to the gourmet restaurant industry after this.
There you go.
Love it.
Yeah.
Awesome. All right. So Bobby, go ahead, Greg.
One more thought on the Southwest. So I think it's interesting that anything went up in the Southwest, because I don't know how many people are aware of this, but the snowbirds exodus the Southwest in the early second quarter, right about the time baseball season usually starts, around the 1st of April. That's when people leave Arizona and New Mexico and West Texas and start going back to Canada or the northern states, Illinois. So it's interesting that there were shipments up, and that's the reason that I feel so strongly that it has a lot to do with the fact that shipments had been so far down in the last 2 quarters.
But another point to ponder, though, is how many of those people got stuck there. There's been news reports that a lot of people got stuck.
Is that right?
Either because they were trying to get back to where they were and didn't want to, for example, head into the Northeast region where, like I said, COVID was on fire.
Yeah.
And because I actually know people who stayed in Mexico. They went to Mexico for a vacation and ended up just staying down there because they didn't want to come back to the States and risk any kind of infection, where they were relatively safe where they were. So I think there might be a bit of that too.
Absolutely.
Kind of dig into some of the news reports that a lot of people said, I'm not going up there. I'm staying here. I'm fine. It's a lot better than other places in the country. So that may or may not be an impact, but I've seen stories along those lines.
Yeah,
so
I could see that.
I personally had a friend who was on vacation in Mexico at a resort when all this hit. And when they were locking them down, they locked in Mexico. They gave her the option that you could stay at a adjusted rate, but stay here if you don't want to go back. And she just came back to Chicago a week ago. I mean, she was in Mexico for 3 months, just working remotely and living on a resort. I mean, it's not really a bad deal, to be honest. But she wasn't in a rush to come back. Her and her husband stayed down there. So I can't imagine there's a ton like that, but there a good whatever portion there is, there every little bit counts in that.
Yeah.
Enough to make a migration. Yeah.
Yes, absolutely.
All right. So the comments there's lots of folks that are Hell's Kitchen fans.
I see this.
Several folks that want to pick your brain on your cooking school at home there, Trent. We'll have to save that for post show.
Oh, absolutely.
All right. So Bobby and to our audience, giving you a heads up, in a few minutes here, we're going to get some observations from the panel, except Bobby, on what to expect moving forward. So would love for y'all to think a little bit about what you're projecting for third quarter or the rest of the year and weigh in. We want to hear from you. Okay, so Bobby, let's tackle the last region here, get a few details on what you saw in the West.
The West had the second best, at least for shipments, with only a 1.8% drop. And then the spend index only contracted 7.5%. And this is because California was able to stabilize in their response to the at least early on to the pandemic, and so their economic activity was able to resume initially a lot sooner. Mm-hmm. And that's basically primarily May and June, which was 2/3 of the quarter they had better economic activity. But the West Coast ports kind of dragged down and kept them from going further, because again, we've talked about the issues with China, and just basically foreign trade in general slowed down, so there wasn't as much volume through the West Coast ports. So
right.
Try to say that 10 times fast.
Yeah,
right?
Yeah, really.
All right. So Greg and Trent, y'all's comments on the West. Trent, we'll start with you.
West is interesting and like I'll just speak from the craft perspective. The West is bigger on fresh foods, less of the prepared and boxed. So we felt our dip on the West Coast, because it was they're more into the fresh fruits, fresh vegetables, organic, so our organic numbers would go up. So we came out with different lines of organic meats and organic versions of some of our favorites, and we noticed those sales were higher on the West Coast during all this, because people were also focused on, they're also very outdoorsy type people looking to be out. They're also looking at the fact that if we're going to be stuck indoors, we might as well eat healthier. And if we're going to eat prepared boxed stuff, get the healthiest version of it. So stuff that's normally, like in the Midwest, the organic mac and cheese, low seller. People aren't really too fixated. They're more flavor based around here than they are health. The West Coast, all the organic numbers started going up, and we started seeing our sales increase in those, and our activity and our shipments of those go up. So we saw a very interesting uptick in that sense. Whereas it's normally not a huge seller in general, but again, it was like going back to it. It was, if we're going to be stuck eating this stuff, we might as well get the best version of it, and that's where we saw our increases in our activity really kick up.
I think that's a really interesting observation, and it goes to the fact that, as we've seen over time, it's been a really mixed bag.
Absolutely.
Right. The dynamics of retail and the dynamics of consumer consumption have changed, even among people who were or weren't more or less organic. Even those have shifted.
Absolutely.
Right. And I think a lot of what we see in the mixing of these numbers, particularly in the West, is some of that dynamic. Is, people are buying things they may not have ever bought before, or never bought in the volume that they're buying them now, and may never buy again, or may have a 20% affinity for what they've consumed during this time frame going forward. So Absolutely. There's just so much mixture in the numbers that it really creates, particularly in the West, it particularly creates a difficult assessment.
It's why retail has always fascinated me, because it's so mood based in a way, and regional, in that sense, where just the mood of a town or of a region of a city can literally shift what people's buying patterns,
Right.
And again, obviously a pandemic's a bigger issue than just, hey, the Bulls lost or something. Right. But like, it's one of those things where but based on region to region, how retail is so affected by the type of people who are there, the mood that overtakes the state, what's going on with their government, just every little factor can fluctuate retail. And in our case, retail food. It's just so interesting to see how the numbers fluctuated throughout all this for us.
Maybe Chris can share what his psychology professor, what his observations on
retail.
There is a lot of psychology and sociology. I mean, I had never heard of Verner's until I lived in Detroit. Right? I mean, there are all of those kinds of things, right?
And everybody eats Verner's in Detroit, right?
I am working hard, Trent, to help uplift demand of Heinz ketchup in Kansas City. We all know why that's a problem. I'm trying to fix Patrick Mahomes and his food choices. I'm on your side, Trent.
Hey, listen, you probably saw this. Heinz came out with a Kansas City version of their barbecue sauce.
Yes.
And I love it personally. I love it. But obviously somebody from Kansas City is going to look at that and laugh and say, "What you got to be kidding me?" Heinz is going to teach me how to do Kansas City barbecue sauce. So again, there's your psychological. Here in Chicago, people up here will buy. I think I can get an authentic Kansas City taste by buying this. You guys down there, like, what are you kidding me?
Yeah.
Again, that's where the psychology comes into retail. It's so fascinating to me that how that works, especially when you cloud it all with a pandemic. The fear of a pandemic, the day-to-day worry of what am I going to eat tomorrow? Do we have enough? Should I have gotten more of this or less of that? All that goes into it, and that eventually trickles down to us and what we end up getting, POs for to ship. It's unbelievable how it has literally almost state to state had a fluctuation.
You wonder how many choices are made more by what's easiest to get delivered.
Absolutely.
Or get.
The store and perhaps buying stuff, but then if you have to pick it out on a list and you're, thinking about other things, you got to pay charges on top of that to get it delivered. Maybe make different choices. So that's be interesting to be able to dissect that.
If you saw at the beginning of all this in your grocery in local stores, you probably saw it. The first thing to go was the box pasta, things like that. The mac and cheese was gone. The box pasta was gone. The box rice. I mean, all those kind of goods. They were easy to get, easy to stock, easy to make.
Canned goods are still, at least in the groceries near us, canned goods are still in short supply.
There you go.
So, people. I mean, I think people thought the apocalypse was coming.
Oh, no doubt. Oh, the way it was sold to us in the beginning, absolutely. Like the way this was all presented at first. I mean, we had no reason to think otherwise. It was not a comfortable time for us.
All right, Greg, I think we're gonna grab some key takeaways, right?
Yep. So I'd like to. I mean, sociology and psychology plays into the dynamics that cause these numbers, Bobby. So I'm interested in. I don't know if that's one of the takeaways, but I'm interested in what are the takeaways from this quarter, from your standpoint.
The takeaways from our perspective, I think, would be that, we're not going to forecast a stellar Q3 or anything like that, but the things to look for are the things that we're noticing, if you want, or trending, let's say trending, is that even though we got hammered, there's still some signs that as things have opened up, it's definitely had a positive impact on the trajectory of the numbers.
Yep.
So to the extent that we can sustain that, I think we'll see, a lot better progress, especially as we go down the road towards the holiday season, because a lot of these mechanisms that are in place, people are going to still continue to use, and they're not going to slow down. And then the things that start to open up more, we saw big impacts in Q1 and going into Q2 for the restaurant and service industries. But as more places are starting to go to level 4, where they can at least have some partial, you're going to see some bounce back. Although as long as they have to have reduced capacity as an example, then, that's still going to maintain an impact. And the other thing to possibly keep an eye out on is capacity, because a lot of this is hammered. A lot of carriers, trying to ride this out.
Mm-hmm.
And so to the extent that they were able to survive, those that couldn't are going to definitely tighten up capacity, which is going to drive some interesting numbers going into Q3.
Well, I mean, there's a couple of good metrics. One, manufacturing started an upturn in May at 3.8% or something like that.
Yes.
And also employment is starting to come back. So as that happens, people get back to work, the society continues to open. That will start to impact the movement of goods, probably different goods than we've seen moving over the last several months, right? Again, to that fluidity, we're going to see a differing dynamic around what is moving. Grocery sales were down. I saw a few weeks ago, grocery sales were down 1.6% because probably of pantry stuffing. People had plenty of it. I can tell you, we didn't mean to do it. We kind of bought it whenever it was available, but we've got a couple of packages of toilet paper that we haven't opened yet, right? So there are lots of those kind of things going on as well. But yeah, I think that's a good point, is that I don't know. I know you can't predict, Bobby, but so I'll put this to you, Trent. Let's get you in trouble at work. I can't say that what we've seen is a a bottom necessarily, but it certainly feels like it right now, or at least feels like we're on an upward tick. This is either a relatively V-shaped recovery as far as recession, or it's going to be a W. It's going to be down, up, right? I don't know, but I would say we are definitely on the upswing right now. What's your thought?
I feel the same way, especially when you see things opening more and more, right? For example, just one that sticks out to me is the theme parks opening up at small capacities now, right? So that's like related to what I mentioned earlier, the food service portion of Kraft. Just having those back up and operational is a little bit, it's like, all right, moving in the right direction, right? We're getting there, creeping up as we get to the holidays. And on Christmas, somebody in the comments mentioned Christmas. That's the big one. That it's like we need that V to really keep going up, and that other end of that V to really keep flying straight because of that. Because Christmas is such a huge time for companies like Kraft-Heinz, and it's a big campaign season for us. New product launches. We literally sell our products to be a part of your holiday, and I feel it is on the upswing, especially if we stay the way we're going. At least I know there's been some setbacks on the pandemic, and going back phases and relocking down certain states and whatnot. But I think it's for the long run benefit, right? We're coming to the end of July. We got time. We got time to get there for that holiday season, and we got time to definitely keep that V straight and on the up and up. But I do see it coming back. I just looking at some of the independent research I do on everything. It seems like we're heading in the right direction. Barring any major catastrophe, I think we'll be okay.
Yeah.
This is looking like where we need it to be. Maybe not as fast as some hoped, but definitely, we're looking in the right direction.
Yeah.
Yeah. Bridget asked that great question about what the holiday season is going to look like. And Trent, I love how you put it there. Data-driven optimism is a lot of what I heard there. And I think we all are hoping that the fall looks a lot like you described. So I hate to wind the discussion down. I've thoroughly enjoyed this episode. Again, I hate to harp on it, but I love how we get the data side and then we kind of get the real life side. And it really puts a great spin on how we view the freight payment index. So let's make sure to our listeners, we encourage you, sign up. We included a direct link in the show notes of today's episode. If you're on YouTube, LinkedIn, or Facebook, click on that link, a couple of questions, and you can sign up and get a copy of the freight payment index each quarter. And then you can join us and give us your insight and being able to do your homework ahead of time. Would love that. So check that out. But let's make sure, Greg, that our audience knows how to get in touch with Bobby and Trent. And Bobby, let's start with you.
How to get in touch with me?
Yeah, I'm sorry. How to get in touch with you and learn more about U.S. Bank and the Freight Payment Index.
The Freight Payment Index, freight.usbank.com. Me, Bobby Holland, bobby.holland@usbank.com.
Easy enough. It's like
He's
a lightning round
relative, man. He's been doing this.
All right, Trent. The same. How can folks connect with you? How can they learn more about the Kraft-Heinz company and make sure we know how to get in touch with your podcast?
Absolutely. Kraft-Heinz.com is the website. Definitely check us out. A ton of information and recipes. If you're looking to get your cooking game up, we put a ton of recipes out there, and they even increased that during the pandemic. So feel free to go there and sweep that. For me personally, Trent Zuberi, as it's written down here on LinkedIn. Just find me there. It's the best way. Or other social. I'm on every social media, guys. I'm all over the place. If you, not to sound like a arrogant here, but if you just put me in Google, like all my links come up. So
awesome.
I'm all over the place, man. I do a lot of different stuff. Podcasting, as the gentleman mentioned here, I do a pro wrestling podcast. It's a very, very different industry than what we're talking about now. I am completely in the other direction here.
I love it though. And you got a lot of folks. That's the beautiful thing of podcasting, right? It's really democratized, regardless of what niche you're in. Yep. Everyone has a voice, and I love it. And Trent, as we were talking pre-show, we're going to have another conversation offline about some of our mutual memories from the wrestling industry. So we'll chat more.
Anytime. But yeah, it's called Total Nonstop Impact. If anybody's interested, take a listen. We broadcast all over the place, YouTube, Twitch, Periscope, Facebook, you name it. We're all over it too. So if you want to talk some some talk show style, morning zoo style pro wrestling, I'm the guy to talk to. Or if you want to talk mac and cheese, also I'm also available.
There you go.
Alex, I'll take things that we didn't expect to talk a lot about for 1,000 on today's Freight Payment Index. But hey, we got to balance work and pleasure. So I love that. All right. So big thanks once again to Bobby Holland and really the whole team over at US Bank. This report and these conversations and your analysis is so helpful, regardless if you're an industry behemoth like Kraft-Heinz or in an earlier stage in a small market company and all points in between. So really appreciate what you do, Bobby. And Trent, as always, to have a practitioner and an industry leader come on and kind of put it in real life terms and what you're experiencing to help validate the data. That makes these episodes even better. So thanks to you both. And if
I can just add one thing about the US Bank. If anyone out there is looking for a freight payment partner, this is I'm saying this purely from I spend more time talking to that US Bank team than I do my own family. 8 hours a day, every 5 days a week, I'm talking to the US Bank team. And they're helping, they're getting us through these freight payables. So if anyone's looking for a freight payment partner, this is truly a partner in that side. They are an extension of the company. And I could not keep the freight moving on the Kraft-Heinz side if we didn't have a partner like US Bank to do it. So Bobby, to you and your team, thank you for all you guys do for us.
Great praise. Awesome. Appreciate it. Thank you.
Yeah, definitely appreciate that. Awesome, all right, so your formal sign off. Thanks so much, Bobby Holland, Vice President, Group Product Manager, Director, Consulting Services with US Bank. Once again, thanks for joining us. And Trent Zuberi, Associate Manager, Logistics, Finance, and Freight Payables for US and Canada with the Kraft-Heinz Company. Thanks to you both, gentlemen.
Yeah, thank you. Appreciate it.
All right. Greg, nothing against the first two episodes of this series earlier in the year because those were great conversations. But this is probably my favorite thus far. I love the mix.
Well, look, we had a dog lover, Lee Klaskow, on the last one, but I mean, I'll take All-Star Wrestling for 1,000.
That's right. But
that's amazing.
It was I really to really get down and validate even what we're seeing region by region. I think that's what makes the interpretation of this data and of this wealth of research so important and so usable.
Well, I think what's interesting is, Bobby can analyze and present the facts, but because he works for a bank, he is regulatorily constrained from being able to make forward-looking predictions. So it's great to have two things. One, a practitioner who experiences it on the ground, and Bobby and Joy and Ashley, they encourage an open discussion around what people are seeing versus what the data is presenting, and that's a great reflection on US Bank. And the other is someone who can say, this is what I see coming, and I think that's really, really valuable part of this assessment as well.
Great point. And great commentary from all of the I was trying to keep track with all the names, but really Stefan and Antonio and Bridget and Jamin and Chris, really appreciate the questions and the commentary, including the light, hard remarks that keeps us on our toes.
Well, look, I can tell you these couple of things. Retail holiday sales are going to be down substantially this year, but it's not a catastrophe because we will apparently have plenty of Heinz ketchup. The best ketchup in the world. Best ketchup in the world, and Kraft macaroni and cheese. So things are looking up.
Yeah. Let's just real quick, because we're wrapping up, but I want to make sure folks know that's not an endorsement. It's not a paid endorsement. It's because it's
definitely not paid.
And I've never been a fan of really sweet ketchup.
Yeah. So
a lot of Heinz competitors didn't do it for me. So that is the best ketchup, and take our word for it. And don't put ketchup. All right, we'll stop there. I was about to go down.
Yes. No, I'll go down there. Do not put ketchup on steak. Do not live in Kansas City.
There we go.
Put ketchup on steak.
All right. So hopefully our listeners have enjoyed this conversation as much as we have. Big thanks to US Bank and the whole team there that puts out the Freight Payment Index. And that's one of those things. There's so many others out there that really keeps things moving. As you heard Trent talk about, having the data and the analytics and how and the insights and how they bake that into better planning. So, and Lord knows it's been really challenging to keep things moving ahead in the challenging year that 2020 has been. So big thanks to US Bank team, and big thanks again to Trent for joining us as well. Greg, really enjoyed this conversation. We invite our listeners to check out a wide variety of programming at supplychainowradio.com. Have a wonderful weekend, everybody. Hey, do good, give forward, and be the change that's needed. And on that note, we'll see you next time here on Supply Chain Now. Thanks, everybody.